What's up, man? Just took this short on US 100 here. Give me a sec here. I can pull up the analysis. I'm looking for shorts on a daily. Give me one sec here. Okay, there we go. Let's break this down here from a daily. On a daily, and I want to go over to NQ as well with this. Looking at NQ, we have this inversion here. Right, we're sitting right inside that. We tap the consequent encroachment of this uh, daily inversion. I'm looking at this equal low. Reason I'm looking at equal low, it's relatively close by. Look at ES. See how close we are to this low here. We already inverted this gap, this inversion. We tapped into that. So ES is overall just a lot weaker, pushing NASDAQ lower. So that gives me a bias of wanting to preferably be short on a higher time frame. So we had a 4-hour fair value gap here coming into this, and I was looking at price reaching up to that high and that high pre-market 830. Those would have been this high as well as these highs here. On a 15-minute, I was looking at this 15-minute fair value gap here. I was expecting that to hold price, push it up higher, which we traded up higher and took out this high. But then we had a breakdown, 8 o'clock. We had a breakdown, would have tapped into that 4-hour. Let me go ahead and just draw the gap up here so you're able to see what I'm talking about because it's not on the screen right now. So pull that gap up into a 1 minute. See that? We tapped right into that gap. Price tanked. Okay, 830 did not do much. We had a bunch of chop. So not much, nothing exciting. So when we traded below this 15-minute fair value gap and we inverted this, then my focus turned into price reaching for this low, 15-minute old low. I was also looking at this gap here at the time, looking at that price rate through that, inverted that. Okay, so I said, okay, I want to see price draw to the low here and to this low here. Of course, I also went on to a 15. I just took a simple fib, low to high. I was looking at, okay, if we trade that low, what else can we trade that is below 50%? Obvious fair value gap right there. That's noted here. Got the fair value gap. You also have another low sitting right there. So that low coupled with this fair value gap, that would be what I would be expecting for the session if price follows through with lower prices here. So that's my initial idea coming into this. I had a bearish bias, and the narrative for me was price reaching down to this low and price reaching for this low down here. So that was my initial idea. What I wanted to see after price failed to go higher, and then we had this 15-minute fair value gap here, and I was looking to see if price wants to go below this, and we're sitting right at the low there, so it's yet to become an inversion, but I would like to see that become an inversion. Now, very much the price action here. Let's switch over to uh, the other US 100 chart. So, with that bearish bias, bearish narrative of price reaching for those old lows, we were sitting in macro 920 to 930. I was looking at, yeah, we had this messy structure, super messy. I don't like it. That's why I wouldn't take it on a live account because of this messy base. If you follow the channel, you'll know that I talked about having a clean base in price, and that gives you extra confluence in your trade, or it just gives you a better setup because it's a clean setup. It's easy to see. You don't have to guess where's the PD array. It's easy to trade, easy to see. So I was looking at. Let's go ahead and zoom this out a bit. I do want to scrunch it a bit so we can focus on price here. Okay, so this was messy. I didn't like this, but we had a high, low, and a higher high. So there's a breaker block coupled with the breaker block with we got a fair value gap sitting right there. So that's a unicorn model. Okay, we got the fair value gap sitting there. So stop. Go back to this. Reason being for my stop being at this level here, which you see at 7%, which is about three three-ish three-ish handles. Reason for the stop placement being there. Go ahead and add it on the chart. Short position. Breaker block. So the short's right there's the low of the breaker block. That's the first tap. You could have taken a short right there. Reason being stop would be there simply because we have a breaker block, we got that fair value gap, and I have an order block sitting right there. Okay, so three PD arrays with that stop, and take profit would be 12%. 12%, right around there. Didn't take 12% on the position. Took a 10% on the position. Price action was pretty messy. So I just said, you know what? If it gives it 10%, grab it. It's a 1-to-1. So get in there and work with your edge. So I took it on a paper, and that's the reasoning behind the setup. And that's a quick little scalp. Little scalp panned out would have given you 10%, 10%, 12% would have easily been accumulated here. Even if you held on to it, still wouldn't have been stopped. Wouldn't have been stopped there, and you could have easily made a 10 handle trade right there. So that is a nice little setup, and that's all you need for the day. Just for those of you, there we have the entry sitting right at the low of this breaker block. High, low, higher, high. Right at the low of this breaker block, I included the wick because the wick would be inside the fair value gap. Fair value gap we have here. For the sake of clarity, let's go ahead and make that a darker color so you can differentiate this. So right there, multiple tabs. I didn't take the first tab, ran down, tapped it again, second time, took an entry, nice little move into that, and there's the exit. Paper trade. And there you go. There's the account, the thing. See, we're still at $1,700. Didn't make much on this one. Didn't risk the full. Usually I would go in with. See, there we go. There's the market. There's the order. There's the stuff. Usually I would go in with a 25 quantity position on the trade. Yeah, just switched it over. Usually I would do that, but since it was messy like this, I opted to, okay, so let's size that down because it's not clean price action. It's going to be a high resistance liquidity run most likely. We are in a CPI week. We had daylight savings shift on Sunday. No news yesterday. We have Jolt's job openings at 10 a.m. So not much to expect today, guys. Gonna be a hard morning. And for Wednesday, we have CPI, and Thursday would be PPI. So I would expect price to clean up after CPI. Things should start cleaning up, and we should get some low resistance liquidity run conditions. So that's the reasoning behind the trade. That's the whole trade. Trade broken down. So that's a nice little move right there that it took place. Not something that I would take in my live account though, but definitely something that is worth taking on a practice account, putting yourself into the market condition, and you push yourself. And you push yourself by getting into these positions, and that's how you build confidence in your model, seeing it over and over working out, and you journal this stuff. So this is going in my journal, and it's something that I'll look back on and study it. So let's go ahead. Let's switch over back to US 100 here. For so far, we are respecting this 50-minute fair value gap. So this is not gonna doesn't look like it's gonna turn into an inversion. 50-minute fair value gap. Respecting that, off of the consequent encroachment of that, took out the low. So liquidity has been swept. Price rallied off higher. So we look to see if price is gonna inverse this. And then obviously we have targets right above here, equal highs, and price could reach for that high as well as all of this low resistance liquidity up here as targets. As far as higher time frame, which is what I want to talk about here, since we traded into this daily inversion consequent encroachment, I want to see price work its way down into this daily equal low and reach below this low ultimately. For seasonal tendencies, we have bullish on NQ as well as dollar. And so far, we have disrespected that completely. So I'm just ignoring that at the moment and just trading along with the trend, not trying to pick any tops or bottoms in the marketplace. And just following along with the trend until we get any structure shifts that are major on a daily or any higher time frame, like a weekly. And upon those, we can then switch to a bullish stance. But currently, we are bearish on these markets. Hopefully, you found this one insightful and you can learn something from this. Until we talk again, be safe.